Welcome to Unleashing Innovation, Tech and Insurance Insights from Industry Innovators. And as you can see, I've got a very technology-oriented panel. Everyone has their iPads or phones. So my name is Clare Ruel, and I am Technology Editor at Insurance Times. In this panel, we're going to be discussing the evolving role of Gibraltar as a hub for insurance innovation. We're going to be looking at emerging trends, challenges, opportunities, and the future direction of the industry in a rapidly changing environment. So without further ado, let me introduce the panel. Over here we've got Freddie Scarratt, Deputy Global Head of Gallagher Insurtech, and he covers the US market. Next to him over here we've got Andy Wright, Managing Director of EICL Extracover Group. Next to me I've got the lovely Melissa Collett, and she is Chief Executive of Insurtech UK, and on the end we've got Paul Harvey, Chief Executive and Founder of Adiona. Round of applause, please.
No, thanks. Thank you.
Right, thank you guys. So, the motor insurance market. Gibraltar, in fact, remains the leading region for motor insurance with 30% of all market share. And that is the UK market share for the motor insurance market. And for me, this really signals the region's position as a leading insurance domicile. Meanwhile, things like the UK pet insurance market, it has about 20% share in that, and travel insurance, 30%. So with that in mind, I thought I'd wake you all up after lunch, and I thought I'd do a panel. So I'd like to see a poll rather. I'd like to see a poll, a show of hands. So the question is 2024 going to be a record-breaking year for Insurtech setting up in Gibraltar? So hands up for yes. Okay. Majority, let's say 80% of the room and all of the panel. And hands up for no. Two people? Three people?
Wrong conference.
Can I just come to someone who said no, and can I ask you why you said no?
Yeah, I may have had too much coffee. No, I said no purely because of some of the uncertainties that exist, particularly around the border in Gib at the moment. And I think all businesses need certainty. And I think if you're coming to set up here, that'll be one thing you're looking for. So I think if we can embrace and get over those challenges earlier on in the year, then I think this could well attract more people. But otherwise, I think you might find next year is perhaps more attractive once we get over those hurdles.
Okay, interesting. I'm going to come back to the point in the end. Okay, so firstly, I wanted to discuss Gibraltar as an evolving hub. So I know some of the panel here, they have a nice anecdote about Gibraltar, and I'm going to come to each of them, and they're going to tell you an anecdote about that. So firstly, I would like to start off with Paul here. Could you tell me what sold you on the idea of Gibraltar?
Sure. Well, by the way, I'm British American, and I swore my allegiance to the Queen and King 20 years ago, so just so I don't confuse anybody. But first of all, I had a big idea. My son's father-in-law is best friends with Bruce Carnegie Brown, the CEO of Lloyd's, and for 16 years, my son's now 31, I've been invited to a Christmas curry where Bruce Carnegie Brown was there. And I didn't know what he was doing for the first 10 years. I sort of figured it out. And I said, we're going to start an InsurTech. He said, come to my office. So I went to the top of Lloyd's, and he was a little bit late, but I could see the ships that Lloyd's originally insured, the very early days. And we had this fascinating discussion, and the original way that risk was priced was about the captain, the vessel, and the destination, forward-looking risk factors. And somehow in the 20th century, we started using backward-looking risk factors. Credit, what does that have to do with driving? Age, gender, postal codes? And before I had that visit, I was fortunate to work at an Italian we like to call it IoT, but it was a telematics company. It was the world-leading provider of telematics, and my good friend Fabio Squacito and I was hired to be the U.S. general manager for Octo, but Octo was extremely successful in Italy, providing motor insurance to the Italian marketplace. And south of Rome, it's just crazy drivers, crazy roads. But the good drivers were great risk, but the only way you can insure them was through a connected car. So with these two ideas, it evolved a little bit. Somebody said to show up to Gibraltar. And our dear friends at Artex was kind of one of our first meetings. And they have been absolute loyal friends to this journey. They said, well, let's think about a lawyer. Well, I said, somebody recommended this firm called Hassan's, which I had not heard of. And all of a sudden, I sent an email, kind of blind email, and Nigel Feetham responded to them and said, why don't you come over this afternoon? And I don't know, you normally talk to a lawyer, they're there for like 15 minutes, 30 minutes. He spent 2 hours with me, giving me the history of Gibraltar, and I talked to him about Silicon Valley and European technology. And that really became the basis. And then at the end of the meeting, he calls up Mike Ashton, who you heard of earlier, and he says, Mike, you got to go talk to this guy, Paul. And Mike, through this entire journey, has been an absolute loyal friend of ours. I don't really know if you could replicate that experience in the UK, but that's certainly what influenced our journey, and that's why we're here in Gibraltar.
Thank you, Paul. Okay, Melissa, coming to you. So Melissa is Chief Executive of Insurtech UK, and I'd like to ask you, what are some of the key challenges, especially to do with licensing for Insurtech UK members?
Thanks, Claire. And I should also make a small disclaimer that, like Paul, I'm also British-American, with the emphasis on British, because I have lived in the UK for the past 33 years. So I'm British by choice. And we could all play a quiz, where is Melissa from? And whoever guesses correctly gets a small prize. So see me in the coffee break. Getting back to the question about the challenges. So I'm here today in Gibraltar. I arrived yesterday. It's my very first visit here. I was fortunate enough to meet lots of you at the Gibraltar lunch and breakfast and various drinks and receptions in London in October, which was fabulous, and thank you for inviting me here. And so I've been in my role as CEO of Insurtech UK since September, and I was fortunate enough to join when we launched our report that we produced with McKinsey about the state of the UK Insurtech market, which I have a paper copy with me today, and a few more for people who are lucky enough to nobble me afterwards. And you can download this online, and I highly recommend it because it has a really good analysis about these challenges that Claire's asking about. In the UK, I think UK insurtechs face similar challenges to insurtechs really anywhere globally, because there are struggles. Our number one struggle is with investment, securing investment funding. I think everyone in this room who's involved with insurtech knows that there was a very huge spike about a couple of years ago where valuations were high, and it's gone significantly lower since then. But that's something that obviously, as an association for insurtechs, we're seeking to support and help our members with securing that funding, and that's why we organize a number of pitch days and events so that our members can meet with those investors, which they really are seeking to do at this time.
Thank you, Melissa. Okay, Andy, I'm going to come to you next. So you were the first Insurtech to be based here in Gibraltar. Could you tell me why you chose this region?
Yeah, so I'll maybe talk about our business and then why we decided to set up a carrier and then why we chose Gibraltar. So Zego was set up as an MGA in 2016 by our co-founders who all worked at Deliveroo and found it really, really difficult to onboard new riders because the access to insurance, the cost of insurance for those segments of workers. So they decided to try and fix this by building an InsurTech. Then in 2018, we started to look at, should we set up our own carrier? And if we should, then what should that look like? Why should we do that? And then more importantly, where should that be based? And for us to set up our own carrier was really important because, one, we wanted to be able to test new products and ideas far faster than traditional insurers can do. And then the second one was, if there was any sort of change in strategy with the carriers that Zego works with, then we could move products to our own carrier, so there's no customer impact. So we're clear what we want to do, and then we started to look at, okay, what are the key things for us when we are going to set up a carrier? So the first one was access to the UK market, because that's our biggest market. The second one was a really fast application process with a regulator, which has been a common theme today. The third one was access to a regulator when we need to talk about changes to our business. And the fourth one was just to be able to set up a business with a really lean org so we don't have a lot of cost and expense built into a really new business. So we looked at the UK and looking at whether we'd apply for a PRA regulated entity, but the process was going to be about 2 years. It's going to be really costly. We then looked at some of the EU markets like Ireland, the Netherlands, Luxembourg, Malta. We could then passport into the UK at that time before the calamity of Brexit. But then we would then have to set up a third country branch at some point, which then means we have to do another applications to the PRA. We have to then have a separate team in place, additional capital. And then we kind of discovered Gibraltar. And we really looked and thought, Gibraltar is a really big hub for insurance. We can get a really quick application process in the grand scheme of things. We can get access to the regulator when we need it. And then we can also use the services of an insurance manager like Artex, which we do today, to really get us up and running. And then we can then start to look at what roles do we need as we then start to scale and grow.
Okay. Thank you. Yes, and just to mention, this is also one of the key challenges for Insurtechs in the UK, just getting licensing to operate as a carrier, as an insurer, as an MGA. So yeah, Gibraltar is really central to that. Freddie, coming to you next. In terms of Gallagher Re, what kind of business does it do in Gibraltar?
Yeah, it's a great question. So Gallagher Re, we are the third largest reinsurance broker in the world. We are a combination of a startup called Capsicum and Willis Re, which merged 2 years ago. Gallagher as a group has a great presence here. Artex seems to be mentioned about every 5 minutes, but obviously Artex is our sister company here, and we work very closely with them. We are the largest reinsurance broker of motor business within the UK, given what you were saying earlier around the market share of Gibraltar. Motor insurance, obviously, then we have many clients here, Advantage, Andy, AA Underwriting, Haven, all clients of ours. And really what we're trying to use is our expertise within the Lloyd's and London market to help place the business and build the capital structures out here in Gibraltar. And my role is new within the company, so I now head up our newly created InsurTech business in Europe. And what I'm trying to do is work with UK MGAs, UK InsurTechs, in getting them set up as quickly and as fast as possible. And what I've really taken away from today is this is a great place for them to look at as a place to set up business like Paul is doing, and should be on their list of one of the first phone calls they have is, well, look, if you're going to try and get set up quickly, have a look at Gibraltar and make sure that you're having the right conversations, because this seems to be a very good place to do that quickly and efficiently. Okay, thank you. I'm going to move on now to the next question. So I'm going to look at a comparison between the UK, US, and Gibraltar markets to do with Insurtech and insurance. So I would like to come to Andy again. And I want to know why motor is kind of the most dominant line in Gibraltar. Why do you think it is?
So I think if I kind of take Yvonne's step and go back in time, that in the late 90s, Lloyd's in London was a massive motor market. And Lloyd's was having a really difficult time with the volume of claims coming through, the size of the claims. the unlimited liability for names, the increase in regulation, and motor insurers decided that they needed to exit there and move somewhere else. So I think Marcus was the first insurer to set up in Gibraltar in 2001. And insurers were looking at, should we set up in the UK or should we come to Gibraltar? And it comes back to that speed of application, speed of process. So back then, it would take about 2 years for an application with the UK regulator. Back then, it was about 6 months with the Gibraltar regulator. So that's one of the big reasons why insurers started to come. And then it was a domino effect. So once one insurer comes, then the other one's like, oh, this sounds like a really cool idea. And the weather's far better than the UK, so why don't we decide to go there? And then we had the likes of Admiral, Advantage, Collingwood, the AA, all started to move over here. And then it's just snowballed after that. I think if you look at some of the financial aspects, that there's clear benefits for insurers to come here, particularly back in the early 2000s. So I think one of the slides earlier was saying about the solvency capital requirements back then were far lower than in the UK. So for a motor insurer, that's a really critical thing for them to do. It's changed now, but back then it was different. The outsource model as well, you don't have to spend a lot of money by building teams of people here, that you can use the services of an Artex or a Robus or a Willis to do some of those regulated individual roles. And then there's also the competitive tax environment as well.
Before I move on, could I just come to Paul, please?
Sure.
I just want your opinion on kind of like the speed to market in terms of getting set up in motor in Gibraltar.
To get regulated here.
Yeah.
I'm going to be honest. It's not the easiest thing.
Okay.
But I think what we have to understand in the insurance sector, there are different ways of funding innovation. And some people fund innovation. Somebody's got some really niche underwriting strategy, and they say, okay, I want to fund this. And they'll go to some entity that'll set up the infrastructure, and they'll build the business, and they'll sell it for, I don't know, 25, 50 million pounds. That doesn't attract big capital. So in our case, our big idea is we're attaching real-time data to machine learning AI engines to drive massive productivity. And when you go through that journey, it takes time. And it took us 2 to 3 years to figure this out. Now, compared to a lot of the other insurance products here, companies that come through, they'll say, that's too long, right? I mean, that's just, but when you compare it to the other AI businesses that I participated in the Bletchley Park agenda for founders, for Prime Minister Sunak, he wanted to know what founders thought about the AI agenda. And 3 years is about all the AIs. Now, what you need is you need really good advisors around you, and we had some phenomenal advisors around you, great legal counsel. And you work this out, you need them to be patient, you don't have any money. But the nice thing about the process, I don't want to say it's, and we don't have it yet either, right? So if there's somebody I can get on my knees to beg for this minded to approve letter, I'd do it right now. But but it's fair, all right? And in fairness, we didn't deliver everything Goldman Sachs, venture capitalists, oh, this money should just fall from the sky, right? It doesn't, right? And so I have no complaints about the process. Well, if we never get the license, I'll come back and say we complain about the process. But it's been fair, it's been hard, and quite frankly, we've received a little bit of tough love sometimes. And that's not, you don't want to hear this. As a VC, when somebody tells you your project isn't quite right, but we've gotten very fair, and it's that type of feedback that's so valuable. I mean, the gentleman that was here and said he never met the Maltese regulator. I don't know how we could have ever started this there, because there was a two-way, and I think we've gotten to the right spot, but we could never have done it if we weren't here in Gibraltar.
Okay, thank you. So compared to the US market, you would say it's maybe faster?
Oh, so you're gonna test me in my US knowledge?
Yes.
Well, I do have a little bit of that. Okay. So I'm a little oddball here. I'm a proud overseas American, and when I move here, I'll be a proud overseas Brit. But I was in the United States for 2 years, working as the U.S. General Manager for Octo. talk about regulatory. The United States is 51 different regulatory environments. 51. You have to add the District of Columbia. That's a pub quiz. The head of insurance or the head of motor vehicles is the second or third most important political position in the state. And then you've got the governors, and then the governors sometimes want to run for president or whatever. It is the most political position, and this is one of the most important positions in the state. So you got 51 of these that you have to deal with. And then they get together in something called the National Association of Insurance Carriers, and it's like the United Nations. Mm-hmm. And you come to these things in big rooms like this, and they're trying to decide policy and where they're going. And then, of course, New York comes in and say, oh, we're the most important state, and California goes, it's a disaster, absolute disaster. And this, the current government has done a spectacular job of attracting some of the best Silicon Valley VCs to come to London because the regulatory environment is too complex, not just in fintech and insurtech, but also crypto and everything. And we have a huge opportunity in this type of environment to take advantage of that. And it's not so easy in the United States. But this is a big product, and it's, just put this in context, in a little bit the volumes here. Insurance is 10% of GDP, and motor is about 4 to 5% of GDP. So it's going to have to be at least half of the product, right? And then you ask why, in the UK we have the price comparison website, so distribution is easy. Now whether you've got an effective underwriting strategy, but the new issue volume in the United Kingdom is the PCWs. And that's why they're advertising all the time. So this is, I don't know if that answered your question there, but that's why, so the US is not easy, and we're very happy to be here in Gibraltar.
Thank you, Paul. Freddie, I'm going to come to you next. So a similar question to you, but in relation to Insurtechs. Is motor the most dominant line in the US for Insurtechs?
Yeah, I think it's a great question. I thought I'd just put it in context, and I'm going to have to check the maths against what Paul's just said later, because I think this is slightly disagreeing with him on this. So we see the UK market being about 22 billion in total. We see the US market being about 360 billion in total. Therefore, in motor, both personal lines and commercial, there is a huge amount of opportunity. And two of the big success Insurtech stories in the US have been motor Insurtech. So Root Insurance, which is telematics, behavioral, which is not too dissimilar to the success stories of Zego and Marshmallow. And then obviously Metro Mile, who some of you may know, who sold to Lemonade for reported 150 million, which is ignoring the 100 million in stock options the founders also got, so about $250 million there. And those are the big returns the VCs are looking for, but that was on the crest of the amount of non-specialist VC money we saw in the US in 2018, 2019, and 2020, which also had a lot of booms and busts when it got to IPO and the VCs then sold out. The UK doesn't have that record. So there is more optimistic VC money within London at the moment, which is kind of in line with what Paul was saying. But motor is dominant, but it is not the dominant Insurtech line of business. That is natural catastrophe. It's the largest insurance line in the world. That's what everyone's, that's where we see a lot of focus. Mm-hmm. In motor, we are seeing a huge amount of successes, though, and that's because these new companies, and Andy can speak much better than I can about this, but the new companies with the new ideas and the new technology can steal a march almost immediately on the direct lines who were doing that 30 years ago when they thought the great idea of just phone us up and we'll give you better pricing, which was a great business model. And so motor's always going to be a major part of Insurtech, but it's not the biggest part, but we are seeing a lot of success stories. The other thing which no one really talks about with motor is the reason a lot of people talk about the Insurtech stories is because most people drive cars in the UK and in the US. No one is going to write a story about a $250 million Insurtech which specializes in natural catastrophe risk, because that's not an interesting story. They are going to write about motor insurance. So you do see it dominate the headlines. We do a lot of business in it, and there are a lot of success stories, but it is also a very marketable story.
That's a great point. I think it will be really, really interesting to see if there's a shift in motor once everyone's driving an electric vehicle, and insurance options change, and maybe it's pay-as-you-go insurance instead of annual policies.
Well, I don't know. I don't know about Gibraltar, but I've seen a few Range Rovers being driven around. But try and getting a Range Rover insurance in London, not from personal experience. We're not doing that well, Gallagher. But Range Rover have had to start their own insurance company recently because you can't get insurance on that. And so it'd be interesting, not just Tesla, but the traditional high-end market as well are going to have to do some pretty exciting stuff. And how can they partner with Zego and Marshmallow and those insurtechs would be really interesting going into the future.
That's because Range Rovers, people love stealing catalytic converters from them, right?
It's just really theft attractive, and then they get shipped out to the UK in a shipping container. So it's really difficult.
Is that personal experience, Andy?
Unfortunately not, no. But I think the interesting thing about the Range Rover is I think it's LV that's providing the capacity, and people are still getting no quotes from Range Rover Insurance. So it's kind of trying to resolve a problem but creating another problem.
I see. Interesting. Okay, so Melissa, I'm going to come to you. How does this situation kind of compare to the UK?
In terms of the insurtechs, like Freddie was saying, it's sort of two. So first of all, how do you define insurtech? So lots of people have lots of different definitions, but I would say it's tech-driven solutions for insurance problems. And so those solutions can come from broadly two types of companies that are working in the regulated space, so they're carrying on regulated insurance activities of some kind, and those tech companies who are pure tech companies but helping those companies who are carrying on the insurance activities of some kind. So that's a sort of broad split. And in the UK, according to the data in the Nexus report that I showed you, it's roughly 60-40 split between tech companies and insurance regulated companies, which comprise the entirety of the insurtech market. If we're talking about the insurance regulated companies, and I mean regulated in the loosest sense, from all the, from being an appointed representative to being, a full stack carrier, that is roughly divided into P&C commercial being the largest slice, worth about $5 billion, and P&C personal lines being worth about $4 billion. So sort of neck and neck, property and casualty across commercial versus personal lines. And I think, Nat Cat will come into the commercial section of that, which is why that's probably the biggest part of that sector. But there's also a significant life and health sector, which is worth about $2 billion. So there's a huge variety of insurtechs, and whilst there are plenty of ones that concentrate on motor, there's also a plethora of other models, and the climate one being another huge one.
Okay, thank you very much. So I'm going to move on to emerging trends and opportunities now. So the customer is always evolving, and insurance has to keep up. So we've seen all sorts of things like pay-as-you-go insurance, all sorts of trends emerging. But one key thing is data that really helps insurance companies. So Andy, I'm going to come to you, and I'm going to ask, how is data and technology being used in pricing?
So we're an insurtech, so we love data and we love tech. And everything that Zego and EICL does is to make insurance simpler and fairer for customers. So we make it simpler by making insurance self-service. So all of our customers get access to an app. They can take out insurance, they can bind insurance, they can do MTAs, they can report claims, they can see how they're driving in real time. We've built functionality so they can see what the renewal premiums are going to be. And then we also try to save customers money by cutting the cost of insurance by digitizing everything, but then also using data and rating factors that other insurers don't have access to. So if we look at our car flex book, so customers who are working for Uber or Deliveroo can buy a per minute policy to cover them for hire and reward, so just purely whilst they're using the vehicle to deliver pizzas or something. We take the shift data because we can see that's predictive of risk. So we know at any given time what time our customers are driving, where they're driving, the length of their shift. We can calculate what we think the fatigue is. So we take the proxy-based factors, which Paul's been talking about, around like age, area, NCD, vehicle type, and then we overlay that with additional rating factors, which then feeds through into better performance in our portfolio. If we also look at, like on the Zego side, they insure a lot of Uber drivers, and we see that the Uber score that we all hit the button and give our driver a rating at the end of the ride, that is also predictive of risk. So Zego ingests that data and then uses that to price the good drivers better and the poorer drivers at a much higher premium. We also then use telematics data to look at how people are driving, because no matter what rating factor you look at, you can't price for, excuse my language, the idiot that's going to be driving the vehicle, because we can all say a 21-year-old is a good driver or a 30-year-old is a better driver, but each of the risk is unique to that person. So we collect telematics data, we share the feedback with the drivers, we can tell drivers where they're performing well, where they're not performing well. We can also then start to share what's going to happen to their renewal premium on some of the more fixed policies. So if a driver's driving really well, we can say you're going to get a 20% discount. So there's an incentive for drivers to continue to improve their driving. If we see poor driving, then we can say, I'm sorry, but your price is going to go up by 20%. And then what we have seen is those drivers then start to move off our portfolio and move to some of our competitors. So it's kind of cleansing our portfolio as well.
Okay. Just based on that, how do you determine what is good driving? How do you monitor that?
Yes, we've got a team of data scientists based in the UK that are looking at harsh acceleration, harsh braking, harsh cornering, time of day, the duration, and then we overlay that with all of the claims data that we have, so we can then start to predict what we think is a good driver or a bad driver, and then we then start to feed that back to the drivers. Okay.
What's their response been like? What the actual driver's response getting this data about their driving?
Yeah, so it varies. So we did a session with some Uber drivers last year where we invited them into the office to say, what do you think of our product? And like, do you like it? What do we need to change? They all love when you get a discount because nobody wants to pay any more than they need to for their insurance. But drivers don't really know how they're driving until it's really explained to them and highlighted to them. So some drivers don't want to do it. So if we're going to write a driver that's got 5 years NCD, he lives in the middle of nowhere, he drives a really boring car, he's 30, he's got a really boring job, then they're not going to want to take telematics because the premium is going to be so low that there's no incentive for them to do that. We're looking at those really underserved segments of the community where they're paying really, really high premiums just because of the work that they do, just because they're trying to earn a living.
Okay, I understand. Thank you for explaining that.
Can I just come in on that,
Sure.
Claire? Because I just, we all were talking earlier about insurance is exciting, and we all know that in this room. But I would say InsurTech is exciting.
I agree.
Because you've just given an example of that, Andy, how not only is InsurTech making things simpler, faster, fairer for customers, it's actually preventing the risk from arising in the first place. It's actually improving and preventing loss. And I just find that incredibly exciting. And I just wanted to mark that moment because that's why we're all here, is how exciting it is to be in the InsurTech sector.
And if anybody wants to come and see the app in real time, then come and grab me later.
It is very cool.
Sorry, that's a shameless plug, but there you go.
Go see Fabio if you want to see ours.
It's not a competition.
Okay, so Melissa, while I've got you, is there any kind of trend in the UK among insurtechs that you're seeing that you think might emerge in other regions?
Yeah, I mean, this report that I shared earlier is full of trends, and I think that we talked about the different types of insurtechs and who's growing the fastest. And I think there is a real interest in life and health and the power of wearable tech. You know, I'm wearing a smartwatch right now, and I know there are more and more companies who are looking at the data that you can be captured from a smart device, and how that can also, like we said, improve driving, improve our health and well-being. I think that's a really exciting potential there, and I know a lot of companies are interested in it. And we're actually going to be starting a life and health work stream as part of our association to bring those companies into the mix and move things forward there. Other trends, well, we know that our insurtechs in the UK, they come in all shapes and sizes, and you know, Paul's company is a member, and you know, there are some members who are going on that journey to becoming authorized and licensed insurers. And I think that that's where there's a bit of a crunch point in the UK, because we've heard today all the stories about how difficult that process is and how much easier and simpler and more accessible the regulator is in Gibraltar. Now, I'm just repeating what I've heard today because I've come here to explore and learn. I don't have any expertise on this yet, but I think by the end of this conference I'll know a lot more. But I think that's a challenge. And so there may be a trend of companies, insurtech companies in the UK or maybe elsewhere, who want to do business in the UK, coming and exploring Gibraltar to see whether that's the place where they can really become fully fledged. Paul also talked about the US market.
Yes.
And the 51 different jurisdictions. I was going to say 50 states, but you're absolutely right. There's the 51st is the federal jurisdiction. And even though Paul and I are both originally from the US, it's still, I mean, it's the absolute minefield. And it's what we do is we're trying to work with some particular states that are very keen to see insurtechs base themselves there, a bit like Gibraltar. So we have a special MOU with Connecticut, where Hartford is the capital. They actually call themselves the insurance capital of the world, Hartford. You may have heard that before. You might disagree with that here in Gibraltar, but they're actively seeking to encourage insurtechs from the UK and elsewhere to set up there, and providing that soft landing where you can get a meeting with the regulator, and where you can get access to a full range of and introductions to all the professional services firms that you need to work with, and so on. So there's a kind of similar vibe going on there. So I think it's quite an interesting thing, because I've met with all the Hartford people, and I can see that having that really first name basis with all the key players in the market is a really essential part of the success of a particular jurisdiction.
We are going to go to the Q&A, because we've run a little bit over time to give people a chance to ask questions. So I'm going to open it up to the room now, if anybody has any questions for this panel. Oh, wow, look at that. Any final thoughts to add before we move into the next panel from our speakers? And I have just taken over from Catherine, because she's going to jump on stage too. Sure. So if you'd like to add any final thoughts, we'll just close the session with that.
Sure. I think each of the panelists had a final thought that they wanted to add.
Perfect.
Yeah.
Do you want me to start?
Yeah.
I think in the current environment, two key statements can be true at the same time to take advantage of this opportunity here right now. There is a transatlantic alliance that has kept the military world order, of which Gibraltar is really important in, the economic world order, the British overseas territories, and particularly Gibraltar has played a really key part of that, and a digital world order, which is now this issue of AI, data, and regulation. And another important statement is Britain is still part of Europe, maybe separate from the European Union, and we must be the leader in some of these key technologies, because this is one of the most exciting times. These technology trends that we're getting excited about are all happening at the same time. This has never happened before. And we have amazing amount of talent that we can attract to this. And the UK needs to be a magnet for this, and Gibraltar's the perfect bridge for it.
Okay. Thank you, Paul. Melissa?
So I would say InsurTech is the grit in the oyster, meaning that it challenges traditional insurance to embrace tech and be more innovative. And so on behalf of InsurTech UK and its members, I'm really looking forward to collaborating with Gibraltar, renewing our existing memorandum of understanding with Gibraltar Finance, and making it an opportunity for our members to do business in the UK.
Okay, thank you. Andy?
I guess I'd just say that I'm really excited that we're based in Gibraltar. I think it's a fab place. I think it's got a lot of opportunities. We're trying to make changes to our business so we can grow. So if we're doing that, other insurers are doing that, which is a big benefit for Gibraltar PLC. And I think we're really proud that we're down here. I think just to pick up on a comment that Liz made earlier is that InsurTechs can be a bit bullish, can be a bit more aggressive than other insurers, and we're really tight on timelines. And I think that's a challenge for the industry as a whole, is that if you want to attract more InsurTechs here, then we're going to have to up the pace with how quickly things get done.
Okay, thank you. And Freddie?
Perfect. Down to me for last. I'm going to make a recommendation, if that's all right. You've all come together today to discuss insurance, capital, InsurTechs here in Gibraltar, and I would recommend you keep that collaboration going. Come to London, come to the InsurTech conferences as a group, not as standalone companies, and sell Gibraltar. And I think that would be really powerful. So in the same way Melissa and I go to ITC Vegas and we try and sell the UK and the London market, you guys should come to the InsurTech conferences in London and sell Gibraltar as somewhere to start those businesses. I think that would be really powerful, and I think it will be more powerful under one banner rather than individual companies.
I agree with that. InsurTech Insights would be a good one.
Yeah. And you can also come hear me speak again.
There we go. Okay, we're going to end now, but I'd like to do the poll again. Could I just ask the poll and see if I can sway the last two people? Is 2024 going to be a record-breaking year for InsurTech in Gibraltar? Hands up for yes. Ooh. Hands up for no. Oh.
Boo.
We're going to take you to dinner in Spain. We did that the other night.
All right, guys. Round of applause for the panel.